This commodity is about to have the run, the kind that gold and silver has already had all year long, and almost nobody is positioned for it yet. Last year was a year of fear. Gold ripped over 60%. This year alone, even in the first month, gold is already up almost 20%. And if you look at the yearly chart, it's up over 80%. Same exact story with silver. 1 month into 2026, and it's already up 53%. And over the past year, it's up almost 260%. As I'm making this video, gold just crushed past the $5,000 an ounce level. It's now sitting at $5,080. So if you owned any of these commodities, you would have crushed it. But here's the uncomfortable truth that most people don't learn until it's too late. You cannot buy yesterday's returns. Markets don't reward nostalgia, they reward what's about to break. And right now, gold and silver are just too crowded of a trade. Everyone knows the story. Everyone already owns the trade. And when that becomes public consensus, that's when the music usually starts slowing down. Meanwhile, something far more important started breaking underneath the market. And it's not about just prices alone, it's about infrastructure. And big tech is seeing this before anyone else. And I'm referring to when Amazon starts behaving differently, you start paying attention. They didn't just go out and buy copper on the open market like everyone else. They locked in a direct supply deal to restart a dead mine in Arizona. And that's not just a strategic play, that's a scramble for supply. And here's why. There is no cloud in the traditional sense. Every AI query, every data center, every electric vehicle, every grid is physical. It pulls electricity, creates heat, and needs cooling. And all of that runs through one non-negotiable metal: copper. There's no substitutes, no shortcuts, and AI uses 10 to 100 times more power than a normal search. Data centers are hitting thermal limits, liquid cooling is also becoming mandatory, and copper demand is exploding at the exact moment mining supply is falling off a cliff. Also, new copper mines take anywhere from 15 to 20 years to build, and we lost an entire decade of exploration. The supply pipeline for the next 10 years is already broken. What's even worse is that the biggest mines are aging and the ore grades are declining. Essentially, we're moving more rock to get less metal. And this isn't a sentiment trade like gold. This is physics. If you run out of copper, you stop building data centers. You stop AI expansion. That's why copper breaking above $6 isn't the top. It's just the beginning. And this is the best trade to get into if you're long copper. If you want clean exposure, the stock is Freeport-McMoRan, ticker symbol FCX. This is the backbone of US copper supply, producing roughly 70% of America's domestic copper through irreplaceable assets like the Morenci mine in Arizona and the massive Grasberg mine. When tech giants start scrambling for a secure American supply chain, this is the first number that they call. And every move higher in copper prices drops directly to Freeport's bottom line. They're generating serious cash flow, and they're deploying new leaching technology to extract more copper from existing rock, which means low-cost growth without waiting a decade for new mines. And if picking individual miners feels too risky, the easy trade button to hit is the Global X Copper Miners ETF, ticker symbol COPX. It gives you diversified exposure across the entire copper ecosystem, including Freeport and other global producers. You're not betting on just one mine or one CEO. You're betting on the structural reality that copper demand is rising faster than supply can respond. As we've all witnessed, gold had its moment, silver had its moment, and whether you like it or not, copper is next. If you enjoyed this video, make sure to drop a follow, drop a like, and check out our free Discord in our bio where we make more trades.